Hey guys, this is TWETV here, and I'm bringing you guys another YouTube video. Today I want to do something a little bit different. I don't want to just go over one part of, the new way of trading. I'm sure everyone is aware of it, right? Smart money concepts, ICT, all of that good stuff. I actually want to break things down, right? Kind of help everyone figure out market structure. So kind of like what I'm doing here, I'm starting from the daily. I'm just marking out plain structure. This is all a range, right? We had that one break of structure there, right? That's telling me that, okay, we had a higher low form on the bottom there, right? And then it created a higher high, and now we're in that range, ideally, right? And I mean, yeah, we have the market reacted definitely somewhere around the midpoint. That's ideally what you're doing on every single time frame, right? Or at least to find the ideal point of entry where we want to get in, right? And hold for a long-term move, right? Like I always tell everybody, enter like a scalper, hold like a swing trader. Same concept. And now that I have that marked out, I want to go ahead and just start marking out structure because now we're hopping into a lower time frame, which is the 4 hour at this point, right? So broke structure to the upside, then the downside. And ideally what we want to look for is something to help us get the highest probability, right? Or at least figure out what would be the logical next move. So we had two breaker structures to the upside, right? Then it broke structure to the downside, right? It swept both of those. And now we have the same concept that I constantly preach, right? Order flow kind of plays a little bit into this. I feel like smart money concept is kind of blown out of the water, with, kind of trying to sell like a golden strategy, like how everyone tries to lead it to be. But in reality, order flow is literally just market structure. And yeah, there's going to be POIs roughly at the end of those higher lows and those lower highs and whatnot for the market to come and respect. But it's just respecting the rules of market structure, right? As it breaks structure to the downside, it creates structure to be respected if it wants to continue in that same direction, if that kind of makes sense. So kind of like the laws I was just talking about, it kind of shows it here where you're seeing the market constantly respecting, right, those secure structures that I used to heavily preach about, right? Those areas, those POIs, where a lot of people would look at them as order flow, but really it's just respecting the laws of market structure. So if it's breaking structure, continually to the downside, right, and we have nothing to basically give us a hint that, okay, maybe it's going to go the opposite direction, then, we have to continue with that hypothesis if you really think about it. So in this case, right, it broke structure to the downside, and then we had the first break of structure to the upside. Okay, beautiful. Then it broke structure to the downside again. Now we're in where the market doesn't necessarily know where it wants to go, right? So then that's where we have to sit back and look at what's going to happen and let it play out a little bit before we can make any form of judgment. So in this case, I waited for it to break structure again and again. And I would safely say you want to look for something kind of like this in the bottom right corner, right, where it's kind of doing what I used to preach heavily, MD, momentum disruption, right? That's literally just, extended version of a chalk, because a chalk is just a hint that it may go in the opposite direction. Doesn't necessarily mean that. What you want to do is you want to find basically where order flow is flipping. Honestly, that's literally what it is in a nutshell, right? Order flow as in supply was being respected. Now that's no longer the case. Demand is being respected. And now there's possibly an opportunity for us to get in on the pullback, if that kind of makes sense. Now, if we really want to break this down, where our ideal entry will be is any of the POIs that form, right, that basically kind of like what I was just marking out in the bottom right corner, right? It was that push that showed us that supply is no longer in control, right? Where order flow is obviously doing something different, right? It's no longer doing what it was doing previously, right? So if supply was originally in control, you want to see a demand break that chain, right? Now, if it's the other way around, that a demand is in control, you want to see a supply break that chain. That's where you will start to find like, okay, that's where my most valuable POIs may be around. Now, it's never going to be perfect. I'm just marking out different possibilities. I know there's genuinely probably going to be a zone roughly around here that it's going to ultimately respect. It's not going to respect every single one. It's not going to do that. Ideally, if it did, there will be so many different scenarios that we could possibly hop in on a scalp and everyone will be profitable. That's just not the case. We got to be honest here, So I'm marking it out here. Okay, we have some form of reaction, doesn't really respect it. Reaction and respect are totally different things. I just wanted to put that out there because a lot of people, I guess think they're the same thing. But anyway, so here's another POI that it made a pretty good move and it created a lot of imbalance, right? So the first one had a reaction, wasn't respected. The second one didn't have a reaction, it was not respected. So the third one, I'm, gonna kind of take a closer look at it. Okay, so we have definitely a reaction here, and it seems to be respecting it somewhat. So that's where we're going to look at it. It's like, okay, that was in the leg, right? That made that big push. It's now, this is all a range, right? Because it made that break of structure. So in this area here, that's where we're going to find the most valuable POIs to get in on the pullback because it broke structure to the upside. What is ideally going to be the next thing to do, right? If it breaks structure, creates a new higher high, it needs to create a higher low to then break structure to create another high or high. It's simple, right? If you really make it simple, that's ultimately the name of the game. You got to make it simple for yourself to understand. Now, seeing us have that kind of reaction, I can probably guarantee you right off the back right now, you probably can find a setup. So what do we got here? So in this case, I kind of see a few different zones that I feel are very valuable to kind of help us get to, where ideal entry may be. So I'm going to mark off this supply because it has reaction, but it later sweeps it, but I'm going to value it. I'm going to mark out this supply, right? Because that's obvious. I mean, look at the momentum in the market. I'm going to mark out that little bit of supply here. I already can see a lot of you probably asking me, why is he marking out so many different supplies? Already sweeped one. Why does it matter? Well, the main reason why I'm marking it out is I'm just trying to double check that the supply is not in control, right? We need to double check that. So in this case right here, one supply was definitely sweeped. The second one was definitely sweeped. So now I mark out my first demand, right? Let it play out and notice how I marked that out, right? And you already see how it already plays out, right? It's literally the exact same setup that I mark out all the time. And that would have been the ideal entry, honestly, because I already saw a sweep, right? We saw multiple supplies, not just one. We saw two get swept. So honestly, taking that demand that I marked out probably would have been a great idea, honestly. I wouldn't call that even a risky entry. I would call that more of a safe entry. But I like to give myself space with the stop loss, depending on the brokers. I mean, you can probably, if you haven't heard by now, I'm sure if you're trading, you already know there's been so much craziness with brokers now. A lot of brokers been kind of doing some shady stuff, trying to overcompensate their losses, and so many people just leaving. I don't want to name the different brokers. I don't want to put them under the bus like that, but there is some brokers that are kind of doing a lot of shady stuff, like locking up your funds that you have like in your account with them and stuff like that. My biggest advice to you, find a broker that has a lot, and I mean a lot of reviews, right? And has great customer service. And obviously, if it's regulated, go for it. If it's non-regulated, always remember you're going to take that gamble. I hope that kind of puts it out there for everyone to kind of know who and what I'm talking about. But anyway, so going back to the market structure, right? And honestly, once you understand supply and demand, market structure seems so much easier to understand, because if you look at it, it's like, okay, broke structure here, right? We're ideally looking for a quick little setup. So the supply was, had a reaction, broke through it. Now we have a demand. Now here's another entry that we can possibly take, right? And notice this came from the original supply and demand transaction that we marked out earlier. And I'm just marking out the different supplies and demands that I see, that they're possible entries. And honestly, you should look at that is they're all connected in some form of way. They're all respecting the same rules, if you really, really think about it in terms of market structure, right? And in this case, it's all coming from that original setup that I marked out, right? It tapped into a POI, right, that formed from that big push to break the previous higher high, right? And that's ultimately how you find those POIs to take entries off of. And like I said, once you combine those two things, market structure, right, the simple laws of it, and combining the laws of, I don't want to call it smart money concepts or ICT or institutional trading. There's so many different names for it and different styles and supply demand. The simple understanding of it, right? How, for example, here I'm marking out order flow. It's respecting it. We probably could have taken scalp entries here. Probably could have. But doesn't mean you have to, right? I'm marking out the liquidity. Well, the supply chain gets disrupted with a big bullish move. And that big bullish move created a demand to possibly take an entry off of and started a whole demand chain. So I'm just marking it out just to kind of open everyone's eyes and see how these two things, when you correlate, the understanding of supply, demand, and liquidity, right? Liquidity is one thing, but it's just understanding where, possibly a lot of people's stop losses may be and where there's a liquidity pool. That's certainly what liquidity is. But going back to what I was saying, if you understand supply, demand, right, the simple laws of it, how it works, how the transactions between the two work, and correlate that with market structure, the simple laws of it, you'll be good. You honestly will. So if I'm just going through here, I'm marking out liquidity here and there, right? We have obvious sweep, right? Broke structure to the downside, liquidity. I just want to go even more in depth right here. It has a whole supply chain, right? And this tapped into a higher time frame demand. Keep that in the back of your head. That's what it ultimately did, right? So if we have that mindset, it's like, okay, look at the supply chain. Oh, wow. It just flipped the whole thing by having a big bullish move, right? It reacted and respected each one, right? Except the last one. The last one, it didn't respect it. It reacted to it, right? That's why you see that candlestick slightly to the downside. And then you have two candlesticks that went up and down, right? To upside, downside. And then you had a bullish move, right? That tells me that there was a demand there because it reacted to it. It didn't respect it, but it reacted to it and then it swept it, right? And it still has more liquidity resting on the upside there for us to target. That's ideally how I'm viewing it, right? It created more liquidity with it creating that equal highs up there, and kind of like how I'm marking it out. That's the overall ideal plan that we're looking at. It's ultimately wanted to break structure to the upside. That's what it was doing. And every time frame has their own market structure and what you can correlate that with. Now, if you need more info, need extra guidance, or if you want to join our last bootcamp of 2023, we have a webinar December 1st. All my links are in my bio. And as always, guys, stay profitable.